Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're back here on YouTube and it's that time again. It's time to look at Bitcoin. Now this will be a shorter video today in terms of the Elliott wave section, as there are really only very few options left to discuss. But we're going to go through the motions as we always do, and we're going to start with the long-term cycle stuff and the seasons and the halving cycles and all that stuff. And I would suggest, if you're new to the channel and you're new to Bitcoin, and there will be more and more of you in the coming months as we enter this wackadoo phase that we're now going into, then I would suggest that you sit through this, watch all this and absorb it, because it will be helpful to you. If however you're a regular on the channel and you're used to all of this stuff, by all means skip forward to the classical analysis part of the video and the Elliott wave part of the video, and yeah, that's absolutely fine. Now, before we progress, I will let you into a little secret. I have predicted price now for this cycle. I put it out to my patrons. It's available on the Green Star Trading Patreon, and it's available on the public Discord, of which you get access to if you're a member. Now, I'm not going to discuss it here on YouTube. Okay, I hate price hype videos. I hate such and such asset is going to such and such clickbait. I'm not interested in doing that. I will progress my count. I will progress my analysis. We'll get there when we get there. But if you want that information, you're going to have to pay for the privilege. I'm not interested in putting it out for free in the public space. I'm not interested in charging you 3 figures a month or 3 figures a year or whatever it is that some people are charging nowadays for their memberships. 10 quid will get you access to everything for a month. 10 quid is slang for £10. 10 British pounds. Right, £15 if you want access to the dividend calendar and stock rating system as well. I'm not interested in ripping people off. All I'm interested in doing is asking for a goodwill gesture for the work, for the extra work that I'm willing to put in. And that's it. You don't have to stay subscribed. You can leave after a month. That's fine. But if you want access to those price targets, you want access to that latest video, that's the way you're going to have to get it. If not, be happy here on YouTube with what I give you, because I think what I give you pretty good value considering it's free. Alright then, so on that note, after blowing sunshine at my own bottom, let's talk about the obvious. I said in the last video that I would very much like to have waited before recording it until we were through the all-time high, but I said not to worry, we'll be there very soon. And what happened? We went through them. It turns out, guys, that a bull flag is indeed a bloody bull flag. We hadn't been banging our head against that brick wall for 8 months hoping that people would listen to us, but strangely enough, wait a second, no, I was. But you can lead the donkey to water, but you can't make it drink. Right, so a bull flag is a bull flag, and now the bull flag is broken up to the upside. Whoop-de-doo. So let's now progress from there. Before we come into the count, let's start with the market cycle. Like I said, you want to pay attention to this if you're new to the channel. Crypto seasons. And then we'll talk about also our halving data as well, but we won't smush it all over the screen at once. That's just a bit too much. So here's the 4-year cycle. You can go from halving to halving, as some people do. You can go from bottom to bottom. You should probably do both, overlap and see what kind of data and information you get. But we're going from bottom to bottom here, and we're going to focus on the bear markets and the bull markets. And that's how we get our future projection for the current finish line, which is the peak of this cycle, and the next market low. So what we've seen over the history of this asset is we've seen bull markets of 1,064 days in length, another 1,064 days in length, and an 1,148 day in length bull market. We've seen bear markets of 413 days, 364 days, 378 days, and the next one I'm projecting will be 385 days. It's just a projection, a guesstimation. Okay, now I've done that by projecting another 1,064 day bull market. It could be longer, it could be shorter. There has been some variation in the past, but as a rule, you could say that we go up for 3 years from a low, and we go down for 1. Bear markets are roughly a year in length. Bull markets are roughly 3 years in lengths. The problem with the phrase bull market is the masses only arrive at the end of it, which is normally the last year of that bull market, and then that gets called bull market, and the media say Bitcoin bull market, but we were in the thing from the moment we bottomed. That was the beginning of the bull market, and there is no other, in my opinion, correct terminology. Right, so we bottomed on Monday the 7th November 2022. Since that day, we've been in the bull market. Now, the early parts, as I said, are a move back to the all-time highs and eventually through it. Okay, and they don't tend to capture the hype and the interest and the influx of the masses. The last phase does, and that's where we get our idea of seasons. Now, this is very subjective and my own personal interpretation. I don't go along with what some other people think. The one thing we'll all agree on, though, is that winter is the bear market. Okay, now given my understanding of Elliott wave theory and wave psychology, wave personality within Elliott wave theory, I like to look at the psychology of market participants through that lens, and that suggests to me what I would suggest is summer and what I would suggest is autumn, and that doesn't mean that we always behave the same way. So for example, autumn in prior cycles have been blow off moves, okay, whereas in the last cycle it was a double topping process essentially. I lean more into the idea that it's going to be another blow off move this time, but that's given what I've seen with the wave personality so far in terms of overall participation and overall market psychology. One of the clues we've had, in my opinion, was this long process of 8 months of going sideways. We came up into the highs of going through the all-time previous high. We came up very early this summer. It's normally very late. We came up to the prior all-time high in the last cycle in January 21. Okay, so that took sorry, excuse me, it wasn't January 21, it was December 2020, excuse me. We came up to the previous 20 grand highs, right, set during the December 17 bull market. So that was quite late in summer, as you can see. This time we came up very early in summer. We came up earlier, we had to spend longer going sideways. We came up later, we spent less time going sideways, right? Double topping procedure in autumn, blow off move in autumn in the prior one. I think we're going to get that blow off move this time. I'm not certain though. Another clue, I believe, given away in the psychology, was the disbelief that we would go through all-time highs and the amount of bears there were during this correction. There was a lot of bearishness. There was a lot of people in a state of disbelief that we would go higher. There was a lot of people calling for a top. There were still many people calling for 10 grand Bitcoin, which I think has been hilarious for a fair old while now. But either way, there were still people calling for it. Those are clues that you are not in the strongest, broadest, most powerful wave within the bull market, which is the free of the free of the free, right? You're in that huge, expansive, all-consuming, hyper-confident part of the market where you've got volume and momentum supporting price combined with positive psychology. None of this felt like a way free to me yet, and therefore that's why my count is what my count is, which we'll discuss later. Now, however, I think the narrative has shifted. I think the psychology has shifted, and I think we are now in that process, and I think that's why my primary count is what it is. But either way, there's your seasons. The next thing we want to discuss is the halving cycles. This is extremely important information for you noobs if you're new to the market, and I want to do my best to help you help explain and help you understand so you can put your experience into some sort of framework. So, if we go back to the halving of 2012, okay, we can see that the post-halving move, that's all of the price movement which occurred after the halving, represented 98.96% of the entire bull market from low to high. And I don't mean it increased by 98%. I mean it represented 98% of the entire rally. The increase in price was 9,000 something percent. So be sure you understand what I'm saying. Of the total bull market from 2011 into the highs of 2013, 98.96% of it occurred post-halving, meaning that a paltry 1.04% occurred pre-halving, but that still represented a 513% price gain if you got in at the very lows. Okay. Now the next one, which was the cycle from 2015 to 2017, saw 97.44% of the entire price move from low to high occur post halving, meaning that the pre-halving gain was 2.56% of the total bull market, representing 297% in percentage terms, low to high, from that for the pre-halving move, not for the whole bull market. That was thousands of percent again. Then we come into the last cycle. In the last cycle, we see that the post-halving move of the entire move from low to high, 91.6% of the entire bull market occurred post-halving, with 8.4% of it occurring pre-halving. I'm sorry for my phone notifications going off, but I have to keep my notifications on audible since my little boy's in nursery today, and any potential text message or something I have to be aware of. So apologies for that. You're just going to have to put up with it. Right, so we've had a 91.6% post-halving representation of the entire market, of the entire bull market occurring post-halving. We've had a 97.4, and we've had a 98.9. So you can see a diminishing return. Right. The total amount of the bull market which occurs post-halving is essentially smaller each time, but it's still massive, 90% plus. We can see, obviously, therefore, the share of the pre-halving move has increased. Right. This makes total sense with my primary count. What does that mean? Well, as we progress through the wave degrees into the 3 of the 3 of the 3 of the 3, so on and so forth, more and more people have become aware earlier in each cycle of the value there is here, and therefore more of the move occurs pre-halving, but it's still pretty paltry. 8.4% of the total bull market only occurred pre-halving, whereas 91.6% of it occurred post-halving. So going into the future, what can we expect? Well, this is where it becomes guesstimations and projections, right? You have to remember, this is not financial trading advice. This is projections based off of prior data. That's all we can go on. We don't have a crystal ball. Anyone who says it's going to do such and such and doesn't provide the slightest bit of evidence as to why they believe that, shut the fuck up or just stop listening to them. Alright? No one knows. Understand? No one knows. Now, what I will say is, if you are going to make a guesstimation or a projection, as I have done and am doing here currently, you better have some evidence to base it on. And the only evidence you've got on is what's happened prior to now, because that's all we've ever got. Right. So on that basis, sorry to get a little irate, but there's just a lot of annoying... we're entering that period of the market, let me be honest, that I love and I hate. I love the opportunity it represents financially for everyone, and I want you to make the most of it. I really, really do. But I hate the vermin out there who are going to try and fuck you and feed off of you and scam you during this period. I hate their guts. Let me be absolutely honest. Alright? It just upsets me to listen to it. I've been in the financial markets for over a decade, and they're just everywhere. And the more hype there is, the more of them come out of the fucking woodwork. But I really am going off of one now, aren't I? Let's just get back on let's get back on task, shall we? So, if the pre-halving move represents 10 to 20% this time, we've had 8.4% with as little as 1%. But let's be pessimistic and let's say 20%. You could say 25 if you wanted. Let's be reasonable. Whatever you like. That means that of the entire bull market from low to where we're going to end up, which I've now announced for you to go and look at if you want to, this, you can go calculate it for yourself really, guys, can't you? But either way, this represents potentially 10 or 20%, as this represented 8.4%. And there you have it. So, market cycle is going to come in sometime around October next year. The following bear market low will be roughly a year later, somewhere around November 2026. We will then progress into another 4-year cycle, from low to low. So, we haven't got that much time left, really, in this 4 to 4 year cycle. We're about a year out from the end of the bull market, which means we're 2 years from the next market bottom. Ish. Give or take. Alright, so there you go, guys. Let's now have a look at the primary count on the long time frame. Oh, one other thing I'd like to point out, actually. I won't use the one I've got recorded here because it'll give away some information. But I mentioned bull flag. Bull flag, bull flag, bull flag. There's another pattern here, which if you're an old school technician, you would have noticed. Right? Oh, we've got to come back to the start of it, sorry. Right. What's that, guys? If you're a classical technician, what's that? I've got a video on the Discord linking all of the classical patterns from bull flags and bear flags and cup and handle patterns, like the one here, to Elliott wave. So you can come and watch that video as well if you sign up. It's a cup and handle. Right, cup and handle is a counter trend move followed by a return to trend followed by a bull flag and a breakout to new all-time highs. Sometimes it pays to just look at the market for what it is, rather than projecting your biases upon it. Okay then. That wraps up that bit, so let's talk about the primary count. So the primary count is 1 2 1 2 1 2 at super cycle degree, 1 2 at cycle degree, 1 2 at primary degree, and now projecting forward from primary degree to find primary 3, primary 4, primary 5 of cycle 3 in the coming years. Okay, I think the main move in this bull market is going to be the completion of primary 3, but I can't be completely certain. I can't be completely certain if it's going to be longer or shorter, but that would be my guess. My guess is that we're going to complete primary 3 for the top of this bull market, and the bear market will be the wave 4 correction at primary degree. That's what I think is happening. So far we can sum this up in two ways. We can sum this up as 1 into 2 and 1 into 2. That's my primary count, intermediate and minor. We are now within minor 3 of intermediate 3 of primary 3. Why do I think that? Psychology. Primarily Elliott wave personality and psychology, plus the time frame I've got within the market cycle to find the top. And the price projections I've now produced as well suggest to me that we're in the 3 of the 3. Prior to this breakout of this corrective period, there was too much negativity, too much bearishness, too much doubt, too much disbelief for us to have already been within the 3 of the 3. It just wasn't bullish enough. But now that we've elected Trump, and now that we've got Doge, Department of Government Efficiency, Doge, I can't fucking believe it, but now that we've got this situation, I can now believe that things are bullish enough to be within the 3 of the 3. The psychology fits and the price action fits. But alternatively, there's this idea. 1 into 2 the same again, but 3 into 4. Now this means intermediate degree 1, 2, 3, 4. The 5 now has to go so far beyond the primary 1 that when the price corrects back for the primary 4, it does not come back into primary 1. If it is, then this 5th will have to be a blow off 5th in order to get further enough away to bring the 4 back and not go into the 1. Now, like I said, price projections you can find on Patreon. I have not put them here, but we'll see in time. So there you go, that's my long-term count. Let's now come over to the small time frame and dig into all the nitty-gritty, shall we? So here we are over on the small time frame. And I mean the small time frame. We're down to the 4-hour chart here. There's no point me beating around the bush. Let's just get straight into it. Minor wave 1 into 2. Invalidation point 49,577. From that moment, we were on our way to new all-time highs. Correction over. Bullish price action resumes. If you're an Elliottician, we had the opportunity of spotting this early. This 1 2 1 2. We were talking about this a moment. We came off of those at 49,577. Yes, I got caught out this prior impulse. If you go back in YouTube, you'll realise that I got caught out here. But the second we put this in, I was highly confident we'd bottomed. Just because of the volume it gave us, the momentum shift it gave us, the completed Elliott wave structure, the regression we'd made, the retracement we'd made, it all pointed to that being a low. Since then, we've marched off in 1 into 2, 1 into 2 at minuet degree, 1 into 2 at sub-minuet degree, breaking the base channel. Now we're out of the base channel, we've back tested the corrective channel. Here's the best fit. I called it best fit because it doesn't fit very neatly as a corrective channel, but it obviously was. So we come back, we back test that, and we springboard higher. This gives us the most recent invalidation point, the 66798. How we get from here is anyone's guess, because volume continues to increase. Things continue to get crazier. and they may only just get more crazy from here. So a conservative way of calculating it would be to suggest that 1 and 3 and 2 are already in at sub-minuet degree. Now please stay with me, I'm going to try and explain this as clearly as I can. The move from this low here in October October the 10th, this represents 5 waves up again into sub-minuet degree 1, sub-minuet degree 2. We could look at this as 3, and then this will be 4, and then this will be 5, completing sub-minuet degree. This will complete 3 at minuet degree, and then we would need 4 at minuet degree, and 5 at minuet degree. That would complete minute degree. We would then need 4 at minute degree, 5 at minute degree. That would complete minor degree. We would then need 4 at minor degree, 5 at minor degree. That would complete intermediate degree. We would then need, you get it, right? There's lots of 4s to come. Lots of 4s to come. That's one way of looking at it. An alternative way of looking at it is we're getting one final 1-2 before we pop. Right, so I step everything down. Now, it's my primary count for the moment because I might as well be bullish. If this comes down further, I can be bearish for the short term and suggest a wave 4. But in the meantime, I might as well continue to be bullish. And say that this is not a nesting 1-2, this is a breakaway 1-2. Some people hate the idea, but I've seen it. I've seen it with my own eyes in prior bull markets. Okay, so we've gone 1, 2, and then 1, 2, 3, 4, 5, sub micro into micro 1 for one more 1, 2. This could come deeper, right? But we're going to use an old rule. It's not always accurate, but it's accurate at least 2/3 of the time, I would guess. Which is we're going to take a copy of the length of time it took to complete sub-minuet 2, and we're going to place that over micro 1. If we go beyond this in time frame, or we make new highs in the meantime, it's unlikely to have been a wave 2 again. Alright, unless it was extremely shallow. Now, if it was extremely shallow, you'll know about it because you'll be on the moon again and rolling. Alright, we'll all be fucking rolling. Alright, now let's put that inside the primary count. Oh no, sorry, not inside the primary count. Let's put it inside the STF, short time frame. So I just said a whole bunch of waffle, didn't I? Let's explain it one more time super cleanly, because I know this is complicated stuff. That's not fair. Elliott wave isn't complicated, it's just a lot of detail. Detail isn't necessarily complexity, is it? Alright, so we came up into minor 1. That's minor 2. Minute 1-2. Minuet 1-2. Sub-minuet 1-2. This is either sub-minuet 3-4 or it's micro 1-2. That's what I'm saying. Either way, we correct, we go up. 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 And we keep doing it. That is what we're doing now. Now bear in mind, those corrections, can you hold your nerve? Can you hold your nerve? Right? Because I've been here twice before, and I'm telling you that these wave 4s, which should be nice, subtle, sideways, gentle affairs, are not. They are violent and brutal. If you don't believe me, should we go back to the prior bull markets? Let's go all the way back to the bull market of 2016-17, shall we? And let's bring up our we got a long-term count here. No, it's on the BLX, isn't it? Bear with me. So here we go. Let's go back to that bull market. Here's an overlapping 4. Here's the 4 it overlapped. Right? Just a brief pullback, yeah? A brief pullback. A brief pullback that lasted 1, 2, 3, 4, 5 weeks. 5 weeks, and price fell 38.88%. The next time it did it, it fell 40%. Nice, shallow, easy to endure wave 4s, right? I hope you get my point. It ain't. Why have I been allocated for months? Let me tell you why. I have absolutely no interest at all in trading through the wackadoo phase. I haven't got what it takes to do it. I just haven't got what it takes to do it. I will hold now, and I will sit on my hands until time and price tells me to stop sitting on my hands and sell. But I'm not trading through the wackadoo phase, or the banana zone, as a certain person has coined it recently, which I think is quite a nice term for it. Actually, I have no interest in getting sliced up by volatility during this crazy period. All right, so you just ask yourself now: price falls 40% from here. Right? Are you going to panic? Are you going to think the bull market's over? Right, it ain't, mate. Things are gonna get so crazy. Things are gonna get so nuts. We come up to here, right, and we fall back 40%, let's say, to overlap something else. That's gonna look like a top, but it ain't. It's a wave 4. Now, don't have a crystal ball. I don't know if this is true, but I'm just trying to prepare you psychologically as why you want to have allocated by now. You want to be in this, and you want to rock, and you want to do this right, because this is an amazing financial opportunity. For those of you who've been following me all this time, been following my primary count and understand what I understand and appreciate what I appreciate and hopefully believe what I believe. Not saying I'm correct, but if you believe it, you've already been allocated. You're already well up in price, right? And you're rocking it. Well done. Right? But for those of you who are just getting on and thinking, oh my god, I'm buying an all-time high. I can't believe I'm buying an all-time high. Why would I do this? This is still good price. Now that's just my opinion, man, and I could be wrong. Okay, I could be wrong, but believe me, it's preferable given the long-term cycles, these 4-year cycles, to sit it out, right, than it is to try and trade through this phase. I've been there. I've been in financial markets for many years, well over a decade. I've been in Bitcoin going back almost a decade now, and I have no interest in being subject to that level of stress. Okay. So anyway, that's probably going off the topic a little bit. Okay, so there's your bullish count. We mentioned the long-term bearish count earlier, but I think I'm going to edit that out of the video before I upload it, because I think it's time to consider an alternative bearish count, right? The old bearish count was the idea that we shouldn't really be making the all-time highs. You know, the voices of the bears at the time, which I was in disagreement with, was the idea that this is an expanding leading diagonal down, or a complex for a WXY. So WXY, right? Or worst case scenario, 1, 2, 3, 4, 5, down to 10 grand. Bullshit, right? Always suspected it was, now been proven to be so. So if we're going to have a bearish count, let's respect the bears and their opinion and give them something viable. And give ourselves something viable, because that's fucking nonsense. So here's something that's viable. Wave 4 alternate count. This is why I don't throw away counts. Now wave 2. Wave 2, no, it's not that one. The new bear count is this. Right, this is an old count. If you're a member of the Discord, your Patreon, you'll recognise it. 1, 2, 3, 4. Well, what's different, Tom? That's the same count. No, it's not. It's a degree less. So if it's a degree less, it can finish a degree less, which means it can finish at intermediate degree rather than at primary. We're expecting primary 3. What if it's intermediate 1? What the hell does that mean? Here was primary 1 into 2. Here was cycle 1 into 2, and prior to that, super cycle. What if the whole thing is another 1, 2? That's as bearish as I can get. That means 5's coming in sooner rather than later. We're going to get a shortened cycle. We're going to get a 1 top out. We're going to get a 2 in intermediate degree, which by all reasons should be smaller than the primary degree. Doesn't have to be, but it should be by this point. And we're going to have another huge sell-off. Ignore that invalidation point. That applied to when it was a wave 4. It doesn't apply anymore. We would need a new invalidation point, which, guess what? It's all the way back here. 15,479. Right. And that's as bearish as I can physically make myself be. Right, without just pie in the sky nonsense. So, there you go. There's a bearish count. It is 5 waves up. The bulls were right all along, but wait, there's a surprise attack. It doesn't complete in 3. It completes as a primary 3. It completes as an intermediate 1, and we get another massive correction into an intermediate 2. Let me be absolutely honest with you. I kind of like it. Am I a sadist? I honestly don't think I am a sadist, but I'm in Bitcoin for life. All right, guys. Michael Saylor has sold me. I'm one of the converted, and I don't care if you think that means I'm an idiot or whatever, but I'm one of the converted. I've looked at the history of this asset, and I've been here long enough. I'm convinced. So if I got to buy Bitcoin at 30 grand, are you fucking kidding me? Are you kidding me? I would jump at it. Right, if I got to buy it at 20 grand, oh my god. But sadly, I think this is very unlikely. And therefore, the primary count of Crazy Land, off we go into the wild blue yonder, is what I think's happening now. So how about we wrap things up with some classical analysis, and then we'll call it a day. So we'll go out to the BLX on this, and we'll look at our weekly exponential moving averages. So we had a sideways consolidation, which was our bull flag, of the 10 weekly and 20 weekly exponential moving averages going sideways, and now they have returned to trending up as they have done before. So they're now trending up. The 60 never stopped trending up, and neither did the 250. Larger wave degrees on the weekly time frame tend to touch the 60, as we've seen before within this trend, and much larger wave degrees tend to pierce the 250. Now, daily time frame, we did it on the daily time frame. The larger wave degrees on the daily time frame come back through the 250-day exponential moving average, the green line, which they did here twice, and now are accelerating away. Right? Weekly time frame, momentum indicators. So we had our shooting star. Is it a shooting star? Hanging man on the top. Dragonfly. It's kind of like an extreme bullish hammer slash dragonfly. It's not. It's like a blend between the two. Either way, big volume on the lows, big long wick. Right. That's when Tom said that's the low. Right. Pretty obvious to anyone watching. High confidence low. That candle is right there. Since that point, the RSI during that time the RSI came back to neutral on the weekly time frame, has already accelerated back up into overbought conditions. So things are already starting to get a little hot, but we are a long way off how hot they can get. They can get really nuts. Okay. Momentum has turned positive. The average dragged the signal line back to the zero bound, typical for a longer term correction, and is now accelerating away into positive momentum, with the histogram growing greener with larger bars week after week. On the ABV, the long term trend on the weekly time frame of the bullish accumulative volume across the most recent lows that we can track, going back to 2018-19 from prior high, we came back to trend and are now moving away from it. We've yet to set new weekly highs on the ABV. I think that will be coming during the blow-off move of this cycle, as I think the new extremes in the weekly momentum and RSI will all come. I don't think we'll get new extremes in the weekly RSI, to be honest. I think it will probably be within the prior cycles, but I think the MACD will expand to new highs. So, a return to positive momentum, a return to positive strength, bullish volume, bullish accumulation of volume confirmed, and increasing volume week after week in actual trading is occurring here at the moment. So all supporting upward price movement. Daily time frame, how are we looking now on the RSI? Getting pretty crazy. Right, up here at 89, we got up to no divergence on the daily time frame yet. Maybe on the smaller hours, 4 hour and below. Oh, there was a little bit between these highs, none on the MACD. Maybe a little bit on the ABV, same highs rather than the higher highs. Going into a little bit of a correction for a while before we go higher, but like I said, wave 4s, remember, they can, even at smaller degrees, as we saw in prior bull markets, they could be pretty gnarly. So all in all, positive momentum is maintained, volume coming back in, breakout confirmed, everything looking bullish. Right, if things suddenly and violently reverse and break down, we'll have to come back and revisit and consider the possibility of 5 waves complete up here. So I think a quick summing up before we go. So the primary count, this is the daytime frame version. 1 2 1 2 1 2 1 2 1 2 1 2. Now 3 4 3 4 3 4 3 4 3 4. Going forward in time, going into the crazy period of the last year of the bull market. Right. Alternate count, my new bear count is 1 2 3 4, coming up into the top of the 1, huge correction into a 2. That's the bearish count. Alternate bullish counts are all built around the idea of a completed wave 4. So 1 2 3 4 complete, similar to the bearish count, but at a higher wave degree, intermediate degree, which means if we're going to clear the wave 1 at primary degree, in order to not come back at primary degree 4, we have to go really high in the 5. So this expects a blow off fifth. Right, blow off fifth move going way higher. And that's it, guys. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you're interested in getting access to the Elliott Wave series on the Patreon, a bunch of other technical information and education videos, weekly live streams, monthly dividend calendar and stock rating system, plus exclusive weekly videos, feel free to sign up to the Patreon. There's a link in the description box below. You can also access that latest Bitcoin video sharing my expected price prediction for this cycle. And until next time we meet, take care of yourselves, don't do anything crazy, and I'll be back with you as soon as I can. All the best. Bye bye.